Is Bitcoin the new digital gold? But what if I told you that gold is actually about to hit new record all-time highs in 2024? Now, BlackRock is the world's largest hedge fund by far, and they're saying crypto or Bitcoin is digitizing gold or the new digital gold. But which is better in 2024? Bitcoin or gold? Now, gold actually has a solid chance of hitting new all-time record highs in 2024, right? Or for the next couple of years because of history. Now, why is this? It's because interest rates are about to fall in the coming year or so. And this is shown as an early indicator in the 2-year US Treasury yields, right? That's the 2-year bond yields. They look out at interest rates 2 years ahead. When they start falling, right? Usually it's a very good indicator that gold is about to go on that major bull run. Okay, let's have a look at it. Okay, let's talk with real facts and actual history. See, gold is the gold line, of course, and the blue line is the US 2-year Treasury yield. It basically indicates where interest rates are going, right? And as we can see, it's been rising for the last year or two, right? But whenever it rises like this, and when it starts falling, or when the Federal Reserve is about to cut interest rates, like here, where the red arrow is indicating around 2000, when interest rates are falling, then gold prices took off again, right? When interest rates start falling, gold prices took off. When interest rates started falling, gold prices took off. And now we're getting a lot of signals saying that interest rates are about to fall again. We're about at peak of the US 2-year Treasury yield, or this is pretty much as hawkish as the Federal Reserve is ever going to be, and they're about to go into dovish mode, and they're going to cut interest rates. So where would gold go after this? But why is gold price related to interest rates? Well, first of all, ask about anything in the world. Is any asset in the world not related to interest rates? The stock market, the bond market, right? The rental property market, everything's related. Now, famously, Warren Buffett doesn't like gold, and he calls gold non-productive asset. That's because, see, if you, like Warren Buffett, he likes bonds. If you buy bonds, then the US government pays you a treasury yield, right? Like a 5%, 3%, 4% yield. It actually yields something. Stocks, eventually, in theory, they're supposed to pay dividends, right? So therefore, they also yield you something. And property, right? Well, you can farm or you can mine, right? Metals or oil out of the property, right? Farming or even building something, so it pays rental yield as well. Gold doesn't pay anything. In fact, you might need to pay a little bit to get gold into a safety deposit box somewhere just to keep it there, right? So therefore, gold is extra sensitive to interest rates because it has no interest yield itself. So when interest rates are high, like the last couple of years, right? When interest rates are rising, then basically it puts gold, it takes the shine off gold, because then people are looking at gold and saying it doesn't do anything. If I put my dosh, my cash into the bank, it gives me 4%, 5% yield, depending on where you are in the world. But in the US dollar, it's like 4 or 5%. But with gold, you don't get anything. So therefore, gold has been held down for the last couple of years. But if you were to, right now, as interest rates are about to fall in the next 12 months or so, realistically, in the next 5 or 6 months, then gold is going to shine again and probably take off.